IndusInd Bank's stock has been in a free fall, hitting a fresh 52-week low of 965 rupees last week, wiping out 38% of its value in 2024 alone. The bank has struggled with a host of issues, particularly its troubled microfinance portfolio, raising serious concerns about its future prospects. IndusInd Bank's September quarter results painted a bleak picture. Slippages in microfinance lending or MFL skyrocketed by 18% sequentially to 398 crore rupees, pushing gross non-performing assets in this segment to an alarming 6.5%. This marks the fourth straight quarter of rising microfinance lending-related GNPAs. Comparatively, the bank's overall GNPA ratio was 2.1%, highlighting the disproportionate risk of its MFL book. Microfinance lending by its nature is unsecured and lacks collateral, making recovery nearly impossible. IndusInd's foray into microfinance lending, touted as a high-margin growth area, has now become a liability, with investor confidence collapsing. The stock plunged 19% in a single day following its dismal second quarter earnings, erasing significant market value. The bank's woes are further compounded by its 2019 merger with Bharat Financial Inclusion, formerly SKS Microfinance. Despite promises of margin expansion, the merger has instead saddled IndusInd with an MFL book riddled with defaults. While the bank has scaled down its microfinance lending portfolio to 32 crore rupees in second quarter, this retreat comes at the cost of losing high-yielding loans that once fetched over 15% interest. The near-term challenges are only going to increase, with microfinance institutions' network tightening lending norms with effect from January. The norms include capping the number of lenders to a single borrower, capping the indebtedness level, and also more restrictions for lending to delinquent or defaulting borrowers. The outlook remains grim, with brokerages slashing target prices and raising red flags. Motilal Oswal Financial Services has cut its target price for the stock twice in as many quarters, now pegging it at 1,500 rupees. Other firms including Nomura, UBS, and BNP Paribas have adopted cautious stances, citing persistent asset quality concerns and waning investor interest in mid-sized banks including IndusInd. Nomura in particular highlighted heightened skepticism among foreign portfolio investors regarding IndusInd's unsecured retail lending and microfinance exposure. Even after the steep correction in its stock price, UBS has reduced its target price to 1,150 rupees, reflecting diminishing optimism.